Two of the most popular income ETFs on the market. One focuses on dividend growth with selective covered calls. The other is built to generate consistent monthly income through options. DIVO and JEPI both promise stability, both promise income, both claim to offer balance. But here's the real question. If you're building a retirement portfolio, which one actually grows your wealth more over time? Because yield looks good on paper, but total return is what determines whether you run out of money. I ran full backtest on both with full drip, partial drip, and no drip. We looked during up markets, pullbacks, and for long-term compounding. When you put them side by side, the differences become very clear. Let's open up the spreadsheet. Welcome back to Simply Money. If you're choosing between DIVO and JEPI, you're making a bet on how income should be generated. One strategy prioritizes quality dividend stocks and writes options selectively. The other systematically sells options to create steady cash flow. They look similar, but their long-term outcome can diverge. Instead of debating yield, I ran the math, because in retirement, you don't get paid in marketing. You get paid in total return. Let's break it down. Now, I'm not going to go through this entire sheet because if you want to see the individual breakdown of both of these, there's individual videos on both JEPI and DIVO. You can find those in the playlist under the all-in scenarios. They're both there, and you can really break down these a little bit further. But I want to give a quick overview for those who are new to the channel. Welcome. Thank you for joining us. What we do in this scenario that we have is we take our hypothetical portfolio, the income portion, and we go all in on one particular fund to see how it would have performed during a time frame. And I've had some requests to say, well, can you compare these two funds? And this is one that was just recently requested, JEPI and DIVO. And so we're doing that. Instead of just looking at one fund, we're going to look at both and see what the outcome comparison is on the full drip, 50% drip, and no drip. These spreadsheets are available in the description down below at Buy Me a Coffee. You can get all of these. I appreciate those that support us through that. And these can be adjusted for you. In the yellow, the date that you start, the amount that you invest, and you can change a few things over here, like you can pick a percentage that you want to reinvest and kind of play with it that way. But what we're going to do here is I'm just going to show you how this works. We started on July 1st, 2020 on both funds, JEPI and DIVO. This is JEPI here we're looking at. We show the share price as it started. It pays out monthly and shows how many shares we're able to buy. Then we have the dividend amount showing here in this column C. So each month we see what the share price was, how much the dividend was, and then whether we go with a full drip, 50% drip, or no drip. These columns show us how much is being paid out to us. And then over here, we see on the different scenarios how much our balance is. So the portfolio balance, whether we're just compounding through 100% dripping, or we're not compounding at all, we're just taking the income, or we're doing a combination of both. We want to maintain and obviously grow our portfolio as well. And again, depends where you're at in your investing life. Where are you at in your investing journey? Leave a comment down below. Are you new to it? Are you just getting started? Are you early on in the accumulation stage, trying to build up your portfolio balance? Are you already in the income phase where you're building up your share quantity? You're not taking the income yet, or maybe you're already retired or using the income to supplement your lifestyle, whatever your reasons are to use the income. Are you using income? If so, are you doing 100% withdrawal, or are you doing like a hybrid 50-50? Let us know in the community down below. I appreciate that. Those comments do help the channel, but it also helps the community. It gives other people ideas of what people are doing, and you guys can dialogue with one another with me as well. And I appreciate that. That really goes a long way. And so that's what we're looking at in these sheets. So we have JEPI here. I'll just come down to the end. And so we have our share price, you can see, went up 17%. So there is some growth in that, which is nice to see. Our dividend here in column C, you can see has been a little bit of fluctuation. It's ending here at 37 cents. You can see it was up in the 60 cents, down to 20 cents at places. It's been kind of all over the place. So if you're looking for consistency, JEPI is one that's a little more volatile, and you'll want to watch that, especially if you're in the using the income phase. So we come down, you can see that in the different scenarios, they've all done well. They've all been positive. With the full drip, you're getting an unrealized gain of 482,000. With 50% drip, 262,000. And with no drip, you still gained 89,000. With these, you have to remember, with full drip, didn't get any income because you reinvested it all. With 50% drip, you got almost $162,000. And with no drip, you're taking all the income, you've gotten $285,000. Then you have to always add those into your total returns. And we're going to look at that in the total returns compared to DIVO here in a minute. Let's hop over to the DIVO chart. Same setup. With this, starting on July 1st, 2020, you can see the share price is $28.22. Again, this is a monthly paying distribution on this. Your DIVO is your symbol, and you had 18,604 shares with your $525,000 portfolio. Let's compare. The first thing we want to look at is share price. It started at $28.22, and you can see we ended at $46.72, so a 65.5% growth. Much more growth on the share value, but again, it pays a smaller yield. Your distribution apparently would be smaller because your yield is lower, but let's see how that works out as we compare these. We're going to look just at the gain. Our full drip, we gained 650,000. With our 50-50, we gained 485,000, plus we got the 112 cash. With the no drip, we gained 344,000, and we got $207,000 in cash. So how did they compare? What are your thoughts before you peek? Do you think DIVO did better? Do you think JEPI did better? Or did one do better in one scenario and another in a different scenario? Leave your comments down below. What were your thoughts? If you've already looked, were you surprised by this? A lot of people are surprised by this. This does surprise some people. Let's see what we have here. Going with 100% drip, JEPI's portfolio, $482,000. DIVO's portfolio, $649,000. That makes sense because JEPI is more income focused. DIVO pays a nice yield, but is more growth focused. So with the balance of the portfolio, you definitely did better with DIVO. But look at the income. JEPI paid $379,000 and DIVO $248,000. Now again, those kind of align to what you would think with a more growth-oriented and a more income-focused. But here's where it really matters. The total return on JEPI on the 100% drip is 92%, where DIVO was 123%. That's a big difference, 32% difference in those almost 6 years of compounding and growing, because you're just reinvesting the income. So even though you're getting more income from JEPI because you're trying to reinvest it, it's really about compounding, and DIVO wins that one by a good substantial amount. So let's see what happens. Do you think 50-50, when you start taking some of the income, which JEPI is supposed to be about, do you do better than DIVO in this scenario? Well, let's see. With JEPI on the 50-50, your portfolio gained $262,000, and DIVO almost doubled that with $485,000. So DIVO continued to grow much faster in the 50-50 because of the impact of the share price growth. Let's see what income does to the matter. Now, JEPI paid $323,000, where DIVO only paid $224,000. So you definitely get a lot more income out of JEPI. Now, total return, let's look at that. JEPI's at 81%, and DIVO's at 114% return. So again, even with the income focus of JEPI taking income, DIVO beat it out by here 33%. Okay, so if income is what JEPI's all about, and DIVO's more, and I keep saying growth, it's balanced with some income, but with a growth element. Let's see, can JEPI overtake DIVO when you just go with income? I'm putting the money in, now I'm taking the income, and I'm going to let it ride. So with zero drip, you're taking all the income. JEPI's portfolio still grew 90,000, which is nice. Check out DIVO, 344,000. Because of that share price growth, your portfolio, even though you're taking the income, was drastically higher with DIVO. However, let's get into the income. Is income going to be outweighing from JEPI to DIVO, because now you're taking all that income and JEPI's income oriented? Here we go, $285,000 from JEPI. Really nice. However, look at DIVO, still paid out almost $208,000. Yes, it's lower income, but look at the comparison in your portfolio balance. You gave up slightly a little bit of income over these 6 years, but look how much you gained in your portfolio balance. JEPI total return 71.5%, DIVO 105%, 34%. So as you progressed more into the income realm, the income ETF JEPI actually didn't even do better. It did worse as the further you went. I would have thought it would have been opposite, and that's what a lot of people think. Oh, JEPI's income, so when it comes to taking income, JEPI's going to be better. That's not the case. Actually, as you take the income, DIVO actually did even better than it did in a drip scenario. So what are your thoughts on that? Were you surprised? I was slightly surprised as it progressed down to the zero drip that JEPI didn't at least close the gap. Instead, the gap got wider. So that was a big understanding in these funds. As you look at them, you want to run these numbers because it gives you a better picture of what's actually happening, and not just looking at, like I said, the marketing of how they're presenting it or the yield. Those are things that sound good. The bottom line is what is your total return? And even if you're looking for income, something like DIVO that pays less didn't pay that much less for the offsetting of how much more you gained. Again, everyone's going to have to make their own decisions. This is not financial advice. I'm not telling you to buy DIVO, JEPI. This is for informational and educational purposes only. It is fun to look at the data to me and see what the numbers actually show. If you want maximum income today, you clearly know which one to go with. But if you care about total wealth over time, the answer is a little bit different perhaps. You're going to have to make those decisions based on your needs, your goals, your income tolerance, all those wonderful things. That is JEPI and DIVO comparison side by side. If you want to see other funds compared, leave those down in the comments below. I'll do more videos like this as well, where we're taking one fund and going head to head against another. So in this one, I think DIVO wins. We're going to move DIVO on to the winner panel, and that'll be up against another fund another time. Maybe we'll do 2 other funds and then take the winners and keep them head to head, and we'll keep doing that, and we'll see what happens. Throw your ideas and comments down below. I appreciate you joining me. Don't forget to hit that like and subscribe button. We'll see you next time on Simply Money.